We've got Andrew Thurman from the Jito Foundation here to talk to us about Jito. Always wanted to talk to Andrew, actually, so this is an honor. Let's kick it off. It's 8 o'clock Eastern Time, February 10th. But here we go. Andrew, welcome to the space. How are you doing, my friend?
I'm doing well. Calling in from Washington, D.C. We're just starting to dig our way out of the snow over here, but always good to hop on with a community as large and as vibrant as yours.
Terrific. Yeah, I've always actually wanted to speak to you. I've read a lot of your work, a lot of your papers, the original papers that you wrote. Let's kick it off with the basics. Why don't you just introduce yourself to the audience? This is a recorded space. I'll send it to you afterwards. This is a nice way for you to do a little bit of a PR. Tell us about yourself, your background, how you got into crypto. Where did you hear about Bitcoin? I'm truly interested to hear your story because you've written so much in the crypto space. And then obviously your voyage to Solana, your voyage to Jito and Mev, and what you're doing today. Give us a little background and then we'll jump into some questions.
Yeah, happy to. So I first got into crypto on a professional basis in about 2018, 2019. I was working with Chainlink on their business development push. We were helping out a lot of the core early DeFi protocols, Synthetics, Aave, Compound, and others on the Oracle problem. Was part of the BD team over there. When I started, it was 2 people. From what I understand, it's now many, many dozens. But back in the day, everything in crypto was much smaller and scrappier. I'd heard about Bitcoin much earlier, of course, but didn't really start trading or getting my hands dirty with the tech until buying the top of the 2017 cycle, and basically been a bag holder and sticking around ever since. But I bopped around a lot in the industry. After working at Chainlink, I was a reporter for many years, then headed over to Nansen to help them with their content. I covered a lot of big stories there, helped train a lot of really serious news desks, including the Wall Street Journal, on how to do on-chain analytics. This was right around the fall of FTX. There were a lot of really big stories happening, and these guys needed help how to interpret huge data. We helped a lot over there. And then for the past 2 years or so, I've been over at Jito. Jito is still very small, wearing a lot of hats, BD, marketing, governance, but most recently I've been helping out on the communications and marketing side.
So what is your education, your specialty? Are you a computer science guy?
Not at all. Funnily enough, before I started working at Chainlink, I was actually an English professor at the University of Pittsburgh.
That's why your writing is so good.
Yeah, I really appreciate you saying that.
Yeah,
yes,
you're right.
Roughly, I would agree.
Phenomenal.
Yeah, really appreciate that.
So you stumbled into crypto, fell in love with it. How did you come across Solana?
I think that sort of after that collapse, late 2022, 2023, I was trying to figure out, which chain really had a chance to emerge from the rubble and do something interesting. My bet, and the bet that a lot of the leadership over at Jito made, was that the next cycle, if there was one, and that era was scary, as I'm sure you know, and it wasn't by any means an assured thing, but we bet that if there was another cycle, it would be the institutional adoption cycle. I think that I saw Solana.
When did you have that? What year?
Yes.
What year was?
I think this was early 2023, early to mid 2023. Starting to look around, starting to see that, even though sentiment was low, there's still a lot of excitement in pockets of the industry, particularly the pockets of the industry that were the closest to big custodians, to banks, to serious market makers. The interest from these really powerful players never really went away. And so it seemed to me that whichever chain could capture that and harness that would probably have the best shot. Prior to that, I'd been a long-time Ethereum guy, really taken in with the culture, really taken in with the ethos. And I think what I saw in Solana was a slightly different mindset. Ethereum folks are really, really fun to get high with and talk about big ideas and talk about white papers. Solana is the best taste in crypto that I found to actually do business and build things and acquire users and try and grow a serious app. And I caught that vibe around Solana immediately and dove in and haven't never looked back.
I feel like the first 2021 move up was retail. The bear market was induced for institutional accumulation, starting obviously right at the bottom with the BlackRock ETF approval. We've just gone through that initial accumulation, and now we're going through the pullback for bank accumulation and sovereign. I have a very similar take around 2023, I felt like it was BlackRock and an ETF type institutional accumulation. And I feel like we've just gone through the pullback for the bank market structure, sovereign, SPR type participant. So I kind of agree with you there. I also have a very similar experience. I worked for Oracle. We built the first distributed systems back in the late 90s, early 2000s. We didn't have Moore's Law. Obviously, in those days, CPUs were nothing. The network was a joke. We had dial-up modems. So we could never really make distributed systems function. But we definitely architected them for Oracle. It's taken many, many years, almost 20 years, until finally along came Bitcoin out of 2008. I popped my ears up, say, oh, here it comes. This is the technology. It's getting its day. And then got heavily into Bitcoin and heavily into Ethereum, just like you. Learned Solidity, wrote code, taught Ethereum, and learned the problems of Ethereum firsthand. And then one day stumbled across Solana and was instantly fell in love with sort of the ethos of the project being what I call sort of Linux 2.0. It's sort of the next open source giant, in my opinion. So we have a very similar story. I'm a computer scientist, so I don't write as well as you. Thankfully, I have AI for that. So I wanted to ask you a couple of questions along the way. Are you ready to go?
Yeah, I'd be delighted.
Okay. So MEV is a three-letter word that gives people the heebie-jeebies, and some people get excited. From you, the man himself, who wrote pretty much the book on MEV, what is MEV? Tell the audience, what is maximum extractable value? How is it implemented? What are the goods? What are the bads? Is it here to stay? Is it part of the infrastructure forever? Go ahead.
Sure. So I think, you want to talk about good writing in crypto, perhaps to the detriment of any project who has ever tried to work in the MEV space. The sort of foundational text on MEV and the piece that has, I think, colored the way that it's looked at and considered since it was written, a paradigm researcher piece. I'm pretty sure it was Dan Robinson wrote The Dark Forest. It was this wonderful little story of trying to help a guy who had lost his private keys in a hack, but the hacker didn't realize that he still had a little bit of funds in like a Uni V2 pool. And so they were trying to build a way to get the funds out, make sure the guy got the funds before the hacker realized that the funds were being moved. And ultimately they failed because this hacker was using MEV to submit a transaction that had higher priority than the owners of this account who are trying to save this money managed to get it out. And, The Dark Forest, reference to a sci-fi classic about how you don't want to be noticed in a large and hostile and PvP environment. And that was great. And it was really interesting. And, it gives you an idea of the sort of long tail of what MEV looks like, where it is really sophisticated actors paying lots and lots of money in priority fees or in Jito tips in Solana's case to make sure that they land a transaction that's usually very predatory. That could be a sandwich attack in which they manipulate the price of an asset around somebody's order in order to take a great deal of money from them based off of their slippage settings, or it could be front-running actual hackers. We've seen this in a couple of the hacks on the Ethereum stablecoin protocol Curve, where somebody figures out a clever way to extract some money out of one of the pools, but a generalized front-runner beats them to the transaction because they're much better at the gas games and the priority fee games. I think that when everybody talks about MEV, that's what they think of. And that's interesting and it's fun and it's great to write papers about, but it is a vanishingly small percentage of what I think the more money-making MEV is. And that's basically just arbitrage. It's people who have identified price discrepancies in assets, trading across different venues. They're paying a little bit of extra money in either Jito tips or priority fees to land a transaction to close that price discrepancy. I think it was some really interesting Ethereum researchers who are trying to criticize Solana, saying, it's this predatory playground for MEV max extract sandwich attackers. and they basically work full time now doing Solana data. Ghost Logs, I believe is their name. But
Correct.
yeah, they now found, I think it's something like 99% of all MEV on Solana is just arbitrage. It's people making markets more efficient and balancing prices between trading venues. So I think you could roughly lump MEV into two categories. One is bad MEV. And despite the fact that it's, again, a very, very small percentage of transactions, it's the one that holds sort of outsized mind share. I think in part because of this excellent piece that everybody should check out called The Dark Forest. But good MEV, which, helps stabilize markets, and you can lump things like DeFi protocol liquidations into good MEV, I think. There's a lot of very good bots that are always just waiting to, liquidate those positions, make a little profit, but ultimately that makes the DeFi protocols run better. So arbitrage, liquidations, these all help the system run better, and users get better execution, they get better rates on their loans, things like that. And then bad MEV is things like sandwich hacking or other predatory forms of extraction. That's roughly how we think about it over at Jito.
Is there a MEV in the stock market?
So I think it depends on where you are. There's one trading venue called Robinhood that has an agreement with one trading firm called Citadel, where Citadel has access to user order flow. And it may or may not be front-running user trades. And that's the only venue where it's allowed, and we're the only civilized nation on earth that allows that arrangement. And it should probably be illegal. Other than that, I think you could argue that there's a lot of high-frequency trading in stock market stuff. So there's not a lot of examples of negative MEV in traditional markets. I do think that high-frequency trading and arbitrage and balancing out prices, that's all over the place. That's the bulk of all trading volume. I think there was an SEC study that found that something like 60% of all transactions are canceled within 50 milliseconds of them being placed because it's market makers playing patty cake with the price. And this is in the NYSE, if I recall correctly. And so there's a lot of arbitrage transactions, but not really negative MEV as we think about it in crypto.
So actually the definition is the problem. One shouldn't say MEV. One has to put whether it's negative or positive MEV. And the answer is the majority of stock market trading is arbitrage, positive MEV, correct?
That's majority in terms of number of trades placed, but also probably by some major magnitude.
There you go.
Total trading volume as well.
There you go, people.
I agree. I think that we've bandied about internally, should we try and rebrand MEV? And I think it's a big task to undertake, especially given that Solana is still the redheaded stepchild in terms of mind share compared to Ethereum. But I think it's something we're going to try and do at some point because it is misunderstood because of these negative connotations when, again, the overwhelming majority of MEV transactions, as they're discussed and thought about, are just arbitrage as it's known in traditional markets, market making.
So if I'm looking to buy a home in a certain neighborhood and can't decide between 3 homes on 3 streets, but then Whole Foods puts up a sign that they're building a store on the corner of property 1 and I buy it, assuming its value will go up because of Whole Foods, is that MEV?
No, because that's
good question, right?
Maybe you could make the case, okay, so if you buy the house and then sell it to somebody else 2 weeks later at a higher price, that's what they call an optimistic sandwich attack.
Sandwich flip?
Yeah. Generally speaking, I would just say that that's speculation. That's the same thing as like you buy a meme coin because you heard that the meme coin founder is about to get on a Twitter space.
Okay, so the point of the question was, can you explain to the audience that out there, what is the difference between speculation and MEV and negative MEV?
So in the case of speculation, you are buying something and you might have a very good thesis. Whole Foods is opening a spot right next door is a pretty good thesis. You're still speculating that the price of an asset is going to go up. In the case of arbitrage MEV, let's say you're looking at the price of Bitcoin on one trading venue and the price of Bitcoin at another trading venue. We've seen it many times throughout history. There's been the kimchi premium, where the price in South Korea is significantly higher than the price in America. And so you can capture that spread. Say Bitcoin's trading at $5,000 in America, it's trading at $6,000 in Korea. So depending on the amount of Bitcoin you can get into the Korean exchange, you can sell at that premium and then bring that money back. I think that a much faster and algorithmic version of that, people using outrageously sophisticated math to find and capture these minute spreads between assets very quickly, often at a sub 100 millisecond speed. That's MEV, that's arbitrage. So very different from simply buying something and hoping that the value is going up. You're looking at the price of something at two different trading venues and capturing the spread between them.
Got it. And on Ethereum, can you explain the difference? I get this question so often. What is the difference between the technical MEV on Solana and the technical MEV on Ethereum? Ethereum has a memory pool, right? A mempool. Does Solana have a mempool? This is an argument I hear a lot. Can you explain to people once and for all the difference between the two networks?
No, in part because it's changing a lot. When I was an Ethereum head, we didn't have things like BuilderNet. My understanding of Ethereum from back in the day is that, yes, there's a mempool. This would be a place where validators would store transactions that were still processing because, block times were 30 seconds or so. Transactions would be stored in the mempool, and that's where searchers, these people who are trying to capture these spreads, or people who are more hostile, who are trying to execute sandwich attacks, they would see the transactions and then build a series of their own transactions around those. Solana briefly did have a mempool. It no longer does. Jito decided to shut it down during the height of meme coin trading when sandwich attacks became some ridiculous percentage of the transactions on the network. I think that does give Solana structural advantages around negative MEV. It means it's harder to do it. You have to do things like optimistic sandwiches, where you execute a transaction in one block and you hope that the opportunity is still there for you to execute in a second block, or wide sandwiches is another term for them. Because if you don't have the mempool, you're just expecting these trades to present themselves. And on Ethereum, I think when you have more time, just wait for these transactions to process and build your own trades around them. It gives you a very significant advantage if you are a searcher.
Okay, that's 20 minutes in. Let's move to the next concept that I think people need to know for once and for all. What is a bundle?
So a bundle is a packet of transactions that you are using to... So one way to think about a core Jito product that's actually probably going to be phased out with the rollout of BAM. But you would use this parallel. On Ethereum, you have these priority fees. You pay those to get your transaction included. And if you're an MEV guy, you just pay a boatload of them and you can front run other people's transactions or make sure that your transaction is landed in a given block. On Solana, in addition to priority fees, Jito introduced this parallel auction mechanism for block space in which people would pay what we call tips in order to include their transactions as bundles. So multiple transactions could be included.
Got it. And is bundles a Jito concept?
That is a great question. I don't want to... There's always one Cosmos guy. And he's always like, oh, we did it first. But I'm pretty sure that it is a Jito first.
Evan Bachman, right? Okay.
Yeah.
Can you walk us through? So let's just zoom out. So you had this idea and you then forked the Solana client, correct? Can you talk us about those days? What was the process? At what point did you fork the Solana client? And what exactly did you change?
This was a little bit before my time.
Okay.
But on Solana, prior to the introduction of Jito,
Okay.
because the throughput was so high, because the chain was so fast and could accommodate so many transactions, it was profitable for searchers to not look for actual trades. So with the Ethereum mempool, people, wait for somebody to place a particular trade on a particular asset. If they think they can execute some sort of profitable strategy, they see that in the mempool during the 30 seconds waiting for block finality, and then they maybe execute their own trade around it. In the case of Solana, where block times are lower, but it could accommodate so many transactions, it was profitable for these high frequency traders to just spam the network with things. And if a user placed a trade that could be profitable, one of these spam transactions would then land. And they're paying, some amount of money in like failed transaction fees. But if you land a profitable trade, the math works out. It was profitable to just spam the network with these hypothetical trades. This led to some ridiculous congestion. The chain wasn't working the way it was intended to because it had accidentally been designed too efficiently, and huge amounts of transactions were just failed transactions that would hypothetically land based on certain user behaviors. This led to the introduction of Jito tips, which allowed searchers to make sure that their transactions would land and they didn't have to pursue these spamming techniques. There was a more profitable way to make sure that you could execute your strategies and significantly reduce the load on the network as a result.
I always use the analogy when I try and talk to regular people about what you're saying. I always say blockchains are sort of like New York nightclubs, right? There's a door. There's the speculation that it's unbelievably amazing inside, so you really want to get in. There's a line of people. There's a bouncer. There's a guest list. And then there's people paying each other to get closer in the line. So you have people tipping the bouncer to get in front of the line. You have people paying each other to get closer to the front of the line. And then you have a guest list, which gets you straight in. But you may get in and it may be no one in there. Do you agree with that?
I think that's roughly right. Yeah, you can apply a lot of that to both how the Solana network used to operate and how it operates now. I think in terms of like the spam era, there was like a few hundred people who had a terminal in front of all the bouncers in every club in New York who were like offering minute amounts more to try and get in, and occasionally one of them would land and then they'd get to go to the club, I guess. But
yeah, absolutely. It shouldn't take $1 to get ahead. It's got to be a minimum of at least $100 bill.
That's exactly.
I think it's a great analogy. Okay, so let's continue with the questions. This is fantastic, by the way. Thank you so much for giving us your time. So Solana, you guys, the Jito Labs. Tell us a little bit about Jito Labs so we can understand the difference between Jito and Jito Labs. Jito Labs is a it's a DAO. Is that correct?
So there's a couple entities, and this is, very much in line with what you see with a lot of the early Ethereum protocols. So the Jito network is comprised of a bunch of interconnected protocols, including Jito Sol, BAM, Block Engine, the JTO token. That's all managed by the DAO. Labs is the development entity that works on those and new technologies. And then Foundation is this organization that helps run the DAO and support the adoption of the network. If you want to go into a very complex breakdown of the history of the Gary Gensler SEC and why we're organized as such, we can do that. But in that sort of 3-entity formation, the DAO, the Foundation, Labs, we're very similar to most DeFi protocols.
Amazing. Okay, so Jito was formed and you came along later on after the formation, right?
I joined, I believe, January 2024.
And what was your initiative when you joined? What was your grand scheme? What was your vision?
The Jito DAO had just launched. And so figuring out a lot of things like early tokenomics, we have a particular program called StakeNet. Jito Sol is the liquid staking token. The Jito network, roughly analogous to something like Lido staked Ether. We have a very nifty program that automatically allocates certain amounts of Sol that's deposited to Jito Sol to certain validators based on on-chain performance history of those validators. And so instead of it being like a business development or governance process that one of the Lido validators gets some amount of stake relative to another, our LST is managed completely on chain. And that required a lot of tuning and a lot of governance process. And so trying to turn Jito, which at that point, hadn't had to grapple with the centralized governance, that was a lot of my early focus.
Got it. So at this point, they already had bundle auctions, right?
They still had those, yes.
Okay. So can you explain to the audience, first of all, let's just touch on this. What is an atomic transaction? Atomic transaction execution. What does that mean for the people in the audience who've never heard of that?
You might have to tell me that one.
I mean, bundles are ultimately an atomic transaction execution. So in other words, executing multiple transactions as if they won.
It's basically, it either succeeds or it doesn't, even if there's multiple transactions in one, if you're talking about like an atomic. If it doesn't succeed, it rolls everything back. If it does, it all goes through.
Got it. So with bundles enabling these automatic transaction execution and tips, what has been like the biggest challenge in preventing negative spam or sandwiching?
Well, I think that, and this is something if you sort of crawl through our governance forum archives, you'll see that we've consistently taken the stance that negative MEV, despite being extremely profitable for validators and by proxy, extremely profitable for the DAO, because we take a portion of Jito tips and fees, we take a very long-term view. The Jito is profit maximalist, but we are long-term profit maximalists. And the way that the Solana network, and therefore us, are going to make the most money is if it's a healthy network where there's a thriving on-chain economy. We want to win long-term. And that doesn't happen if even a vanishingly small percentage of transactions on the network are negative NAV. It basically can't exist on the network. And we've always taken that view, and we've always done what we can to prevent negative MEV. What that is and what that looks like has been this shifting force for a very long time. Cutting out validators from Jito Sol delegation that are participating in fork clients of Jito Sol that accept that, include a mempool. That happened shortly after we shut down the mempool, like vote lagging and slot lagging, which is manipulating how much time you get to build a block, which depending on the builder software you're using can induce a little negative MEV. This can get very complicated, especially in the sort of latter stages of Solana block building. There's always these guys working on edge cases to make money in, kind of unfair and extractive ways. And a lot of the work that we've been doing is trying to find that, stay ahead of it, really sophisticated on-chain analytics and research to try and minimize that risk.
So the next question is, so with Jito, transactions, there's a decision-making point to route stake to validators, right? Ones that have a high percentage of MEV rewards, things like that, right? Is that correct?
No. So again, we do have this program called StakeNet that automatically delegates our stake to validators who have certain performance metrics. They might, they need to keep their fees at a certain level, do this, do that. And we only try and introduce any sort of manual blacklisting, or we don't really add, we do subtract based on people doing things that the DAO has deemed to be negative to the network.
Got it. I got that in my head. Can you do you have any understanding of Shred Stream?
That one is above my pay grade, I'm afraid. I'm familiar with the product, but I'm not going to be able to say anything intelligent.
No problem. Okay, so Jito has distributed a lot of money. I think it's like $1 billion in MEV value to stakers, right, and validators.
1.3 the last time I looked at it, yeah.
Good Lord. And can you explain to the audience what exactly is Jito Sol?
So yeah, Jito Sol is the Jito Network's liquid staking token. Like I said, analogous to something like Lido staked Ether. Normally, when you stake your gas token on a network, it is locked. You don't have the liquidity. You can't use that asset as collateral in a DeFi protocol. You can't move quickly into and out of that position. On Solana, there's a 3-day wait period. I believe on Ethereum, it's about 2 weeks. But a liquid staking token like Jito Sol helps mitigate those by giving you a parallel asset that represents your stake in the network as well as your accrued rewards from the staking fees.
And you mentioned earlier, I made a note, a product called BAM, right? So first of all, can you, in answering this question, maybe explain to us what BAM is? What's restaking and liquid staking, like with Jito Sol, evolving? Where do you see Jito fitting in long term, especially like with vertical integration with apps and potentially with this new primitive BAM? What is BAM and how is this evolution materializing? What can we expect?
Yeah, I think that, if I talk to people who are loosely plugged into the Solana ecosystem, they're going to know what Jito is, but they're not going to quite know what it does. I
Okay.
think that we're most well known for the liquid staking token, Jito Sol. It's a big DeFi protocol. We've been top 10 across all chains at different points and things like that. And people know that we loosely work in MEV. So to understand BAM and how BAM and Jito Sol sort of fit together, you need to look at, Jito, what it is and what it does in Solana. We talk about Jito as the market layer. Solana is an incredibly efficient machine, incredibly high throughput, constantly getting better. But Jito is the layer that allows all of that capacity to turn into value. We make sure that the incentives are aligned, that execution is predictable, everything works properly. Jito Sol, works well in that regard as a kind of internet form of capital. It can be used as collateral. It allows you to participate in the on-chain economy in the most capital efficient and yield bearing way.
I believe Jito Sol now has 2 ETF applications, correct?
Yeah, we've got one live ETP trading in Europe right now. That's the 21 shares Jito Sol ETP. And we're waiting on one in the US as well. I'm not going to talk too much more because I don't know what we're allowed to talk about yet or not. But we have stuff in the works across the globe as well.
And what is the benefit to the issuer as well as the ETF investor to a liquid staking asset in an ETF rather than the native asset itself? Other than the higher TVL, the higher yield, right?
Yeah, that's exactly right. I think that there's a short answer to that, and there's a much longer answer to that. I think the short answer is that, of course, the yield-bearing version of the asset is obviously much more efficient. Anatoly, in particular, has talked about how he sees sort of naked or unstaked SOL. That's a tax on people who aren't staking it, who aren't participating in securing the network. The inflation is hitting you directly in the pocket if you have and you're not staking it. And so if you're somebody who wants to trade these assets in your brokerage account, you don't want to worry about getting on chain, you don't want to worry about self-custody, having this product that allows you access to the yield while giving you exposure to the underlying asset, I think that's really attractive. So that's the short answer. I think the longer one is that eventually, if the thesis that Solana does continue to capture some significant portion of things like stablecoin transfer volumes, where Solana is increasingly dominant, if it continues to capture things like trading tokenized stocks, if more and more of the legacy financial infrastructure moves on to blockchains like Solana, this means obviously the underlying asset's going to do very well, the yield is going to be very significant, and this is going to unlock a lot of really interesting large money opportunities like the carry trade. You see people trading around government issued debt. You hear about the carry trade in, US treasuries, in Japanese bond yields, these huge sums of money building products around trading around that yield. I think that one of the things that Jito is really excited about and our long-term institutional BD vision is putting in place the infrastructure and getting enough liquidity in these exchange traded products that really, really sophisticated traders can build yield products around that Jito Sol, ERP, and ETP, and things like that. And so that's the first step, is getting them listed and traded. And then from there, we can start working with custodians. We can start getting these bundled products together, where I think you're talking about hundreds of billions and trillions of dollars in trading volume from people executing these strategies. And so getting these products into those people's hands, I think is the really big prize.
100%. Quickly, we have 20 minutes left. How will Solana's new Alpenglow proposal and upgrade affect Jito?
I think that we're entering an era where Layer 0 just announced some new L1 with Tether or some such, and they're claiming like 2 million transactions per second. Firedancer is very, very admirable for making it clear that they want the limits of the engineering and the speed of TPS to literally be the speed of light. The only thing slowing down the chain should be the fact that we can only get blips of light going through the fiber optic cables at a certain speed. There comes a point, though, where all of that speed and all of that capacity, all of this TPS is functionally useless unless the applications can have some control over transaction sequencing. I think one of the reasons why Hyperliquid has been so successful is that they allow market makers to prioritize cancel orders and make sure that those transactions get included in blocks. If you look at it like at any random given Hyperliquid block, 90% of the transactions are going to be cancel orders. And this is a function of the chain that they specifically designed to allow these players to participate. And the impact is very obvious. They're attracting more liquidity and they're attracting more sophisticated traders. I do think that Alpenglow hugely important in terms of staying competitive with emerging L1s, but the more important narrative as time goes on is going to be called what they call ACE, application controlled execution.
Right.
The apps have the ability to control and prioritize certain types of transactions, and in doing so can begin to attract these really sophisticated players. As they're currently built, a lot of major banks and a lot of major hedge funds, a lot of, market makers, they can't participate in these on-chain economies because they can't give best execution guarantees. They need to their clients. They have legal obligations to make sure transactions go through sometimes. They have to comply with OFAC and FinCEN, and that's another use case. They have all these needs that blockchain simply can't provide, no matter how many TPS there are. And so I think that that's the more important thing to think about going forward. There reaches a certain point where the difference between 50,000 TPS and 2 million TPS is de minimis, and ACE becomes far more important.
Will there be a certain need to integrate technically with Alpenglow? Would there be a rewrite of the Jito code to adapt to Alpenglow, or will it be quite a smooth integration?
We're talking with the guys all the time. We had the Jito Frankendancer, we've got Jito Firedancer, BAM Firedancer is coming out. I have the internal timeline for when BAM Firedancer is coming out. I don't know if that's public yet, but soon.
For the audience, the BAM stands for Block Assembly Marketplace.
That's right. For those who are in the weeds, we took a lot of the inspiration of that design from BuilderNet on Ethereum. The idea is that there's a secondary set of validators or infrastructure providers called BAM nodes that will run these things called trusted execution environments, where these enclaves that can't be tampered with, that will order the transactions before sending them to the validators. And this is a programmatic way to effectively, except for some really sophisticated edge cases where you're holding like a microwave up to the computer chips that are processing these things, really sophisticated way to make sure that applications can order transactions as they want, and you can effectively remove entirely all of negative MEV.
What's the timeline for Alpenglow at this point? Do you guys get any feedback?
They say fall 2026, so 12 to 18 months.
What are the major competitors to Jito block building? I know I have Ben from Harmonic coming tomorrow. Do you see them as a competitor?
I think that's fair to say. I think anybody who's sort of following Solana Twitter right now has probably seen some chirping between Jito and Harmonic. It's very much mirroring a lot of the best of Solana culture, which I would describe as very familial. I grew up in a household with 3 brothers. There was a lot of infighting, but if an outsider picked on one of us, suddenly we'd form ranks. And so there's a healthy competition between us right now, but if you look at the adoption statistics, I think right now we're comfortably in the lead.
And now, maybe a hard question is, I see Jito was involved in Clarity Act roundtables. Is there anything within the new regulatory regime coming from market structure and clarity that might look at MEV or anything to do with bundles or the auctions or anything upcoming with a different lens?
I don't think so. Similar to the same conversations that we're having on panels like these about how MEV is misunderstood, we're having those same conversations with regulators.
100%. That's exactly the answer I was looking for. Miseducation, ignorance, and just needing correct explanation as to good and bad MEV.
Exactly. I do think that you're seeing some interesting things in Europe where they're explicitly making forms of bad MEV illegal. I think that's very tough to do just with our experience in the Jito DAO, trying to play whack-a-mole with different kinds of negative MEV. It's a constantly shifting landscape. And so I think it's going to be very hard for a regulatory body. If a crypto governance system is struggling to keep up, I don't know if, those cats can be herded quite as quickly. But it is interesting that we're seeing at least some legal bodies sort of take the stance that this behavior shouldn't be acceptable in active markets.
So a question just out of left field. If Jito didn't exist, what would you see having happened with Solana?
I think some form of Jito would have eventually had to have come to exist. Otherwise, the spam problem would have just overwhelmed the network. You needed a way to prioritize high value transactions for traders. And, that started with, the Jito tip system. And I think that's reaching its apotheosis with BAM. BAM is going to allow applications to really compete with more sophisticated players now like Hyperliquid, to give institutions the assurances they need to actually transact in these networks. BAM is the thing, the spam problem was holding back Solana, and getting rid of that made it competitive with that generation of blockchain competitors and gave birth to a lot of really interesting things that we saw, be it in DPEN or in the meme coin media. The sheer amount of stress tests that Solana went through when both the president and his wife launched a meme coin. It's possible that we're never going to see that amount of transaction volume on a blockchain for another couple of years. And Jito helped make that possible. Now, though, pivoting to what would the network look like without BAM, I think is also an interesting question.
Yes, that is.
Yeah.
What's your thought?
And that's going to be, Solana would fade into irrelevance, and it would begin to lose to these competitors like Hyperliquid that do have application controlled execution. I think it's a similar sort of existential moment, and we have the solution now.
Right. And what is the sort of roadmap and timing for BAM's implementation?
Yeah, we've got a lot of these. I believe we're up to a dozen. It could be more than that. BAM nodes around the globe. We're rolling out more and more of them. I think the milestone that we're most excited about is making it open source. We need to get more people running nodes, so to make that sort of subnetwork decentralized, as well as have the code in everybody's hands for auditing, because we want the majority of the network to be running it. For it to be a centralized network, can't do that without open sourcing it. And so that's the next big thing that I'm excited about on the roadmap. But then after that, we need to start working on the plugins, the way that these applications can interact with the block building architecture to prioritize theirs. We've got a few potential demos coming down the pipe, and we think once people see the possibilities, things like Oracle updates, cancel priority, that's really going to allow application builders to do a lot of really interesting things.
And in your opinion, a couple more questions before we wrap up. Thanks for your time. Do you think that BAM, Jito, this entire adventure journey is all in the same vein to support internet capital markets and just attack the general TradFi stock market problem? Or is it a parallel effort? How do you see the internet capital market moniker trying to compete with tokenized equities on Solana versus the stock market, the NASDAQ? Do you have any take on that? Do you guys talk about that? Is Jito very important in that goal?
I do think about the work that we're doing at Jito in historical terms pretty often. In my view, I think that we can basically pack it up, right? The cypherpunks have won. The goal initially was to create a parallel on-chain economy where anyone, be it a sex worker, a drug dealer, a political dissident, could have access to basic financial services in an uncensorable and decentralized way. And we did that. Like the majority of the original project and vision, we can safely declare victory, pat ourselves on the back. We won. I hope that, nobody ever has to use it, but we have really hard, really uncorruptible tools that, Bitcoin isn't going anywhere. We won. And so what's next? So that's 80% of the project. What's the last 20? And I think that's where we have this parallel economy. This alternative actually becomes the standard. In the process of building this thing out, I think the Visa network can do something like 10,000 transactions a second. Like we have multiple chains that have far eclipsed the legacy infrastructure. We can now move dollars around the world instantly and cheaply. And that just isn't possible when you look at traditional rails. We've built something that could become the standard. We just need, and the downstream effects of it becoming the standard would be incredibly good for the species. It would functionally become impossible to box somebody out of the economy ever again.
It's one of those things where if it was adopted even for an hour, we could never go back.
I think so. Why would anybody ever participate in a bank that would, function as a walled garden again? The amount of middleman fees would come down. The amount of overall efficiency would skyrocket. Money is energy, the ability to move it around faster and more efficiently. It just does incredible things in an economy. And, again, the ability for a hostile entity to take away the product of your labor becomes significantly harder, if not impossible, if it becomes the standard. So we do want to set the standard.
Andrew, I will have to come to the ending by saying, who would not want that?
Yeah. Well,
I wouldn't want that. That's the final mustard of today's entire spaces we've been doing for 9 hours. Who would not want what Andrew just said?
Indeed. I think, Jito is working on the next generation of infrastructure that's going to allow that to happen. And for who wouldn't want it, I'll leave that to the audience to put on their personal tinfoil hats.
I think that is an absolute summary to perfection of your talk today. Andrew, fantastic stuff. I would love to schedule another talk with you at some point and we can continue. But that was a fantastic hour. It's recorded. I will send you the recording. Anybody in the audience, any questions of Andrew before we let him go?